Joining us right now to talk markets is Alicia Levine. She's the head of investment strategy and equities at BNY Wealth. Alicia, it's elections day. It's election day, but do you really want to start talking about that and what the market impacts might be depending on what we don't know what's going to happen tonight and tomorrow?
So we've been telling our clients who, people are very concerned about this election on both sides. I'd say this. We tell our clients never invest with your politics, because markets always see through and trade on fundamentals and not who's in the White House and not who's in Congress. And so if you look at all the configurations of Congress and who's in the White House, markets rise in every administration, because ultimately markets reflect the fundamentals of the U.S. economy and earnings and growth and margins, and that's what we trade on.
And it's still America.
And it's still America, and it's still the place where capital is treated the best, and we have the deepest markets, the deepest capital markets, and so we still think there's American exceptionalism. So for markets, we see, a lot of conversation around it, but you have to see through it.
Okay, the markets have not only been pretty robust through this. We're talking up 31% for year to date. So there's been none of that pre-election wobble type of situation. Do you expect to see a post-election bounce?
So we're in the strongest quarter of the year. December is the strongest month. Typically, you see the bounce into the end of the year. It's been very surprising that there hasn't been any angst in the market at all. There's been some consolidation around this 5,800, 5,900 point, but that's been the extent of it, even as the bond market has sold off 60 basis points on the 10-year. So this is remarkable. And I think what it's telling you is that the market sees through all the discussion, all the polling, what everybody's saying, and ultimately the economy's fine, corporates are fine, cash flow is fine. And that's what the market trades on. I do think that if there is an extended period of not knowing who's in the White House,
right, that's a different story.
Because it's uncertainty, and in the end, markets trade uncertainty, and whatever the policy is going to be priced in, and we move on.
Okay. If the election is not going to faze you, what about the Fed meeting that starts tomorrow?
So, and it's interesting. It's a day later, right? So the presser's on Thursday. So we're not fazed about the Fed meeting. It looks like the jobs report on Friday that came in at 12,000, and even if you add back in that 100,000, that maybe we're assuming that's what's missing.
The 100,000 from the two hurricanes that took place and the strike at Boeing, which has now been resolved.
Right. So that gives the Fed room to cut the 25 basis points just to make sure. I think that the cutting the 50 basis points and then right after that getting this really strong data and then revising upward the previous jobs numbers was not, was concerning probably, and that's where you start to price in. Maybe they don't cut twice into the end of the year, but it looks like they will because of this most recent.
So probably nothing this week, nothing unexpected.
I don't think it's going to be unexpected. And I think they'll just be very careful to toe the road. If we do have a president at that time, I think it's not going to be referred to at all. It's going to be about policy, inflation, growth, and where the real rate is.
And finally, let's talk earnings. For the most part, been pretty strong, although there have been a few tech surprises.
Yeah, so the earnings themselves were good. It was the guidance, right? And again, we're coming back to the capex issue on large cap tech. So earnings season has been good. We're coming in about 3 or 4% better than expected, which is actually quite strong. 75% of companies are beating. But it's some of those bellwether names where capex is continuing to grow. And even though you are starting to see an acceleration in revenue in the AI, parts of those businesses, as long as capex is growing and it's crushing some of the margins there on the free cash flow, you're going to maybe have some consolidation in these names. Ultimately, we still think these are the winners. You have to go through the capex cycle here, but that's really what caused some of the pause here. And in the end, it wasn't huge sell-offs. It was just, oh, okay, you had a great quarter. You're guiding capex higher, so we're going to consolidate.
But overall, you're pretty positive.
We're positive. Yeah. We're positive on the market, regardless of what happens tonight, today. We think Congress will be a divided Congress. That's going to be the most positive thing at all, and we'll know that tonight.
You'll know that tonight. And if it isn't,
we should know Congress.
And if it isn't, does the market fall or rise?
I think you'll see it more in the bond market then you'll see it in the stock market. Because the stock market is telling you they can go either way. Regardless of what's happening with the betting markets and the polls that we had over the weekend, the stock market's pretty steady. You're seeing it in the bond market because the positioning in the bond market has been very extreme on one side. So you'll see it there. Either you'll see continuation of that trade or the unwind of that trade once we know Congress tonight.